All right. So we got a bunch of new people in here. So, you know, we're gonna look at, it's very important for you to look, check the news out every day. We don't care about the actual, you know, or the forecast. Let's see what today is. All right, today is the third. So
Hey,
for
Brandon,
example, you see, what's the,
what time that was when you
huh?
said they had shot to the moon? What time that was when it did that?
It was like lunchtime.
Last time. Okay.
So for example, you see where it says USD. You see these red folders. You, you need to focus on the orange and the red folders. We don't care about these numbers. Like you see this to the right, the actual and the forecast. Let me go to the top so you can see what I'm talking about. You see where it says actual and forecast. We don't care about none of that. We just need to know what time this volatile news is gonna come out. So today we really didn't have no important news. We had some dollar news. It really didn't do nothing. But it's very important to check your news every day on Forex Factory. But we finna get into it. So you know, this what when we was on stream yesterday. You see my chart. See my chart like this. You see how this look. Is my mic muted?
No, no.
Y'all see that?
Yeah.
See how clean this is. Price tells a story. You see all these setups. We gonna show you how to do this. Buy right here, sell right here, buy right here, sell right here, buy right here, sell up here. We're gonna show you how to do that. We call this ping pong. We don't get into that, but just to show you how we look at the market. So let me show you this. And let me show you this. See this right here, what I just drew on my screen? This is the Fibonacci. See at the bottom of my screen, it says field retracement. It's a measurement tool. It's nothing, this tool right here is very powerful. We use this tool it'll tell us if prices at a discount or if prices at a premium. If prices at a discount, you see where it says 0.5 right here in the middle, right here. 0.5, that's the middle of the range. From swing low to swing high, this the middle of the range. Where it says 0.5, that's the middle of the range. You don't want to trade at the middle of the range because it can go either way. When prices, so this is 50%. We call that equilibrium. So when price is below 50%, we consider this whole blue area a discount, meaning we're looking for a buy setup on a smaller time frame. But when price breaks above 50%, now price is expensive. We call that a premium market. We're looking for a sale setup on a smaller time frame. But if you know, once you get some experience with, drawing this field out, this is your signal. This is your indicator. It's gonna tell you should you be buying or should you be selling. You get what I'm saying? But once you master this gonna take your trading to the next level. This right here. All you need is the 50. All you need is the 50%. But y'all understand that premium and discount.
Yup.
Discount meaning cheap. Price is cheap. You know how they be like buy low and sell high.
Yeah.
When prices at a discount, what we doing? We buying. We buying them. We buying it. The TVs and stuff like that when it's on sale. But when price is expensive, you want to look for sale. So when it's cheap, you buy. When it's expensive, you're looking for a sale. You get what I'm saying? That's what we
Yeah.
mean by premium and discount. All right. So we finna get into it. So that was all yesterday. You see all this right here? This was all yesterday. Going up and down with it. Premium. I mean, discount to premium, premium to discount. Ping pong plays. Let me just keep it clean. Let me see how I do this. To daily. I'm just gonna start off first. So you always want to start off on your daily time frame. You're trying to see where you at on a bigger scheme of things. So you remember how I drew that field out? See this little wick right here at the top? Swing high. Where do we come from? Where the price go? It went all the way down here. You see that? You remember how I was talking about, that 50%? Anything above 50%, what do we consider that area? A premium. So price was expensive up here. When price is expensive, it's gonna break down. You see that? What did it break down to? See how we broke below 50%? What do we consider this down here? What kind of market is this down here?
Discount.
So when price is at a discount, we're looking for a buy setup on a smaller time frame. This is just the daily, for example. You always want to start off on your daily and work your way down. You're trying to see where can you get in at. You get what I'm saying? So when price is at on a daily, we at a discount. So boom. So you go 4 hour. You're trying to see where can you get in at. So you're at a discount. You can let me do this. Since we got a bunch of new people in here, let me train y'all eye a little bit. You see these little wicks, these little short-term highs? See where I'm drawing these black lines at? You know what sits above these highs? Oh yeah, I need some interactions with this. All my new people. Y'all see these highs right here?
Yeah.
You know, retail traders, what do they put that? So say for example, let me zoom this in so y'all can see it pretty good. Say for example, retail traders, they sold right here. They call this resistance, whatever they. Say for example, they sold. So when price went up, they sold up here. What would they put their? So say for example, you sold right here. Where would you put your stop loss? Right above this line, wouldn't it? So it's like a bunch of stop losses sit above this high. So all these little short term highs that you see, these little wicks, it's a bunch of stop losses above this line. You know, so it's like a bunch of money when I, so prices program is driven price. It goes to these areas. It's driven to these areas where all these stop losses sit above these highs. Where all this money at, the algorithm is programmed to go to those areas. You get what I'm saying? So if price is at a discount, we take profit at a premium, meaning you see these highs with them black lines at, look left to get right. So if price is at a discount, you see all these highs that they left behind here, here, here. When price is at a discount, when it's cheap, it's gonna go up and take out these highs that they left behind. These retail traders that's in profit, they gonna come take them out. You get what I'm saying? Those are take profit areas. So if you bought down here, you take profit here. You take profit here. Let me show you this right here. Let me show you this right here. Let's see if I can get a good one. You see this red candle right here? This big old engulfing candle. You see how when it opened up, it just sold down, it slammed down aggressive like that, and it closed. That's a one-sided market, meaning it's just all sales, no buys. You get what I'm saying? It closed down here. When the next candle opened up, it should tap into this red candle. Buyers, sellers and buyers should be offered in each candlestick. You get what I'm saying? So this green candle. So the next candle opened up, it should offer buyers into this candlestick right here. Each candlestick should be traded into fairly. Like look at this. See how this slammed down? It closed, and then it bought back up. It tapped into this red candle right here. Then the next candle opened up. It tapped into this one. So each candlestick is being traded into fairly. Both sides of the market have to be offered fairly. So this candle it opened up, just tapped into it here just a little bit. And you see how this slipped like this and it closed. Look at this right here. This candle it opened up, down, it closed right here, but it just barely wicked into this blue area. This right here, this little area is still open. We call this a gap. From this little wick over here to right here. This whole little blue area is still open. So eventually when price get to a discount and it start coming back up, it's gonna fill in this area. You get what I'm saying? Because it's still open. Same thing right here. When this kind of opened up, it should fill in this area. But we call this a gap. I'm just trying to train your eye for my new people. All the gap is a one-sided market. Let me get into it. So to get into for today. All right. So on the daily, we was at a discount. So we did 4 hours, 1 hour. We trying to see where can we get in at. So you want to draw your field from your most recent swing high to swing low. No, we was down here. Yeah, yesterday we was right here. So this what happened this morning. During London session, price had bought all the way up. Anything above 50%, we consider that a premium market. So let's see if we can find this sale setup right here on a smaller time frame. You got to do surgery. So you got to find it 30 minutes. Trying to see where can we get in at 15, 5. We're doing surgery. We know price is expensive. We trying to see where can we get in at 1 minute. You gotta find it. So boom. Take this off. So you see how, I know it ain't much. You know, what's this above highs? Money. Retail traders. So it's a bunch of money above this little week right here, these 2 weeks. See how this kind of just reached up above these highs? We call that a stop run. All the stop run is manipulation. So now you want to see this happen first. Don't get it confused now. We on the 1 minute. This is one whole candle. You know, they just broke it up in little pieces. But this one whole candle. So this whole candle just pushed up above these highs. Now you want to see price breaking down. You want to see a market structure shift. So you want to see this happen first. Now we're looking for a market structure shift. Go to your line chart. See this little short-term low right here. Price to the right, close below it. Price to the right, close below it. So that's our change in trend, market structure shift. Now you got to ask yourself, did price leave a gap? I know it ain't much. This the 1 minute, you know. But what is this right here? From this little week to right here. what do we call this little blue area that's still
Yeah.
open? And what do we need to see happen on gas? Gas had to get what in the future?
Trade it back into.
So we got our manipulation right here. We need to see retail traders getting stopped out first. Okay, that happened right here. Now we waited for the market structure shift. Go to the line chart. Structure broke right here. Okay, and when we drew the fib out, we knew price was in the premium on the 5 15 minute. So you see this right here. Price was down here. It was cheap down here. You see how it brought all the way up. Now, say for example, you woke up late. You knew the market was going up. You forgot to set your alarm. Would you buy up here?
No.
Well, 90% of retail traders they did. They bought up here. They buy at a high. They buy in a premium, and they sell at a discount. You get what I'm saying? You know how they be like buy low and sell high. Is price high right now, or is it cheap? Where is price currently at?
High.
It's very important to know where you at on the chart at all times. They didn't teach us that when we first started. So prices in the premium, that's why we're looking for a sale. But you want to see all this happening. Manipulation. Now we're waiting for market structure, waiting for that market structure shift. We got okay. Now you waiting for the next candlestick. You waiting for it to come to this counter right here. Boom. As soon as it tap into this little blue area, you can play. What I mean by play, you can press the button. So boom, right here. As soon as it retests this gap, because buyers had to be offered in this little candlestick. So boom, we selling. So say we got 3 entries right here. Prices in a premium. We take profit at a discount, meaning the lows, the previous lows to the left. Let's set a 10 point. Let's put our stop loss. You got to put your stop loss above the counter that stop retail traders out. So you can put it at this little wick right here. That's where we'll put it at to give us some space because we on 1 minute. You get what I'm saying? So if prices in the premium, we take profit at a discount, meaning the low. See this low right here? Retail traders put their stop losses below there. Same thing right here. Where the money at? You got to ask yourself, where's the money? That's where you want to target. That's where you want to get at the market at. See this little blue area right here that I just drew up? What do we call this?
Yeah.
And gaps had to get what in the future?
Trade it back into.
Yep. And now you see how I drew my risk to reward? All you need is a 2 to 1, meaning you risking 1% of your account to gain 2. That's all you need. Don't get too greedy, but the way we trade, these are some explosive trades, meaning you're risking, less, the risk reward is pretty big. It's crazy. So if price is in a premium, it should go down to a discount, meaning it should become cheap. So here and these lows right here. That's what we aiming for. That's a 1 to almost a 1 to 5 risk to reward, meaning you'll gain 5% on your account. Oh, and let me show you this. Say for example, price shoot up and hit your stop loss. Let me show you this. Say you lose this trade, it hit your stop loss. All it's doing is it's going to a higher premium. It's gonna get even more expensive. You want to look for the same thing that happened right here. Manipulation, market structure shift. Did it leave a gap? It has to leave a gap. When it come back for that retest, you play. You want to see all this happening again. You want to see it, breaking structure right here. If did it leave a gap on this little leg? When price come back to it, then you sell it again. All you're gonna get a better interest. So say you lose this trade and it do all this again, you're gonna get a better interest. That's how I look at it. So don't get mad if you lose this trade. You know you wet. You know prices in the premium. You get what I'm saying? So let's play it up. So you got to be patient. Trust the setup. Trust the setup. Trust the setup. Don't be scared to take a loss. And then what's this below this low right here? What's this below that low? Hmm. Money. You could have got a re-entry right here. See, price came back up to a premium. It was a small little gap right here. Did price come back to it? See that? Boom. You could have got another entry right there. Where's the money at? Price is expensive right now. It should start breaking down. Boom. Where did it go? See these lows right here? Look, look. See how prices ran down, took these folks out? They blew their account. This how they looking right now. This they face. They said,
You sold for it?
boom, look at that. Look. See how aggressive that's pushing
I'm
down?
weak.
Where did it go? Where did it go to? Look. See this area that I highlighted? Where did it go to? Did it tap into it?
Yeah.
Now look at this. Sellers have been offered in this candlestick now. See that? See how you could have got 2 inches right here. You could have been done for the day. You get what I'm saying? Go buy you some steak and shrimps. You know what I'm saying? Boom, look at that. Where's price going to? It went from being expensive, now it should drop all the way down to become cheap now. If you got questions, you can ask them. Closed mouth, closed mouths don't get fed. And you see how much we in profit right now. It say 159. You see how far price ran. Now this how I do it. So I stop loss able to high, but once I see it breaking down like this, so say we get up like 50 or 60 points, this US 30. See where I got this black line? I'm over my stop loss and profit now. Boom. So I don't have no risk on the table now. So as it's going, I'm just gonna keep managing as it going. I'm taking partials. I always take partials when you in trades like this. Pay yourself for finding the setup. Trail your stop loss as it when it goes. Secure your money. Don't give it back. You get what I'm saying?
And
If
I
you
ain't even gonna lie, man. Like one of my biggest problems that I used to make, or the biggest mistakes I used to make, like what you were just saying, like how you're let's say the trade do go the other way. That just means it's giving you a better setup. If price keep breaking down.
yeah, look at it. You see how these are some explosive trades. Look at this. It's a 7 to 1. 90% of traders can't do that in a day. Gain 7%. You see how explosive that just fell off the cliff? What's this below these lows? It's retail support. Every time price came to touch this line, they buying it. Okay, I'm dropping 1,000 lots. Okay, you get what I'm saying? Where would they put their stop loss? Right below this low. Price is programmed. It's going down to these retail trader stop loss. Target achieved. And now look at this. These are some very explosive trades. I'm gonna take this off. What is this right here? Just to train your eye. See this whole green candle, this big old engulfing candle? That was just all buys. You see that? All buys. So that's a one-sided market. We call that a gap. And gaps have to get filled in the future. It just win though. But when prices in a premium, when it break all the way down, it's gonna come down and fill in this area. You get what I'm saying? So if I zoom it out, prices breaking down, it's gonna fill this area in eventually. So you being patient. This whole area is still open. That's what I mean by when I say open, those open gaps. Now let's just say we get out this trade right here. Boom, we ain't gonna get too greedy. Just go ahead and book it. 225, be done for the day. Whatever you satisfied with. But yeah, I just wanted y'all to see that right there. That's how we get our precise entry. Now you see this sale that happened up here at the top. We did surgery. The entry was on a 1 minute, and you see how it just sold off. What is this right here? This see where I got this little arrow. See this whole green candle? That's a whole gap. So when prices and a premium up here at the top, it was very expensive. What did it sell off to? Fill in this area. See that? And then this whole candle right here. What is this? A one-sided market. So when price start buying up to fill in this whole candlestick to make it efficient. What I mean by efficient is both sides of the market have been traded into fairly. So look at this. Just look. Price came from a premium. It dropped all the way down to a what? To a discount. You get what I'm saying? Let me draw the fib out. So you want to draw it from your recent swing high. Where do we come from? Where do we stop at? We stop down here. See that? Remember how I was talking about that 50%? You want to sell above 50%. You want to buy below 50%. You see that? So price is very cheap right now. Let me show you this. So let's get into it. Look at this. What's this below lows? You know how retail traders be like retail support. So when they see price wreck from this area, they waiting patiently. When price come back to it, they gonna buy again. So where would they put their stop loss? Right below this low. Big money, they know that. So they had to trade in this way. So they'll sell down, they'll hit your stop loss. These people right here, they had to trade right, but they weren't patient enough for big money to show themselves. Wait for big money to get in. So when they sell and stop you out, they getting you on the wrong side of the trade. So these people here, when they hit their stop loss, they selling. They be like, okay, it's just gonna go down. So when they see this kind of going down, they selling down here at a discount. You get what I'm saying? You don't want to sell at a discount. You want to be buying. So let me show you this. Let me take this off. So big money bought right here. Big money bought right here at this little wick at the bottom. See that? So when they selling down, they holding that sell position and drawdown, and then they bought down here where I drew this this little blue box, and then you can see that proof. See how price just ran away like that. So now you got to find it. You got to find that entry. So this was that whole push down. This one whole candle. Don't get it confused. We just drop down to the 5 minute to try to see that market structure shift. So now it's that whole stop run right here. This whole blue area. Let me go to the 15 so you can see what I'm talking about. See this whole red candle? That's the manipulation. We call that a stop run. It stopped these people out. Look left to get right. Boom. So now we're looking for a market structure shift. Go to your line chart. If your eye ain't trained, let me go to the 5 minute. Your line chart right here. You see this little short term high? Price to the right closed above it. So now you got to ask yourself, did price leave a gap? See this right here? You see this little candle right here? See this little green little? Let me do this. So soon as price do this and it close above that short term high. Do this the whole little gap look. Okay, let me zoom it in. Right there. See how aggressive that pushed up and it closed? From this wick to the left and from the way it closed that's that open area, that gap. That's that proof. You know, that's what you want to see. So boom, soon as price do that, see how the next kind of opened up and it tapped down. Let me see. I don't think you can see it. So when price opened up and it wicked down into it, see that right here? It wicked down into this green candle. Sellers have been offering in this area now. So boom, soon as price come back to this blue area, now you want to get your entry. Why are we looking to buy? Because price is at a discount. It's very cheap right now. So boom, zoom it out. So you gotta ask yourself where the money at. So we know we at a discount. We got our entry right here. Go ahead and mark up your take profit areas. Where you trying to get out the market at? Where these black lines at? These people still in profit right here. So the algorithm is programmed to come take these people out of the market. So this is where the money at. Money sits above highs and below lows. So it's like they wiped the board. They sold up here when price got cheap. Now they looking to buy to take it up higher. It's like they wiped the board. So you see these people right here in the middle, they finna get stopped out. You get what I'm saying? So it's like you follow it. So boom, we going long right here. You put your stop loss. You put your stop loss right below the low, right below this, right below these lows. So we got a 26 point stop loss. Look left to get right. Where the money at? Here, here, here. And then what is this right here? It's kind of small though. See this little gap right here that's still open. So boom, let's say we aim for right here, almost a 5 to 1, 4 to 1 right here. We're risking $26 to gain 122. Would you press that button? I would too.
Most definitely.
And then you just be patient. We know what we get on the chart. We don't guess. Everybody else they guessing in the world. We don't guess. We know where to get in and get out at. So be patient. So for example, say this hit your stop loss. Same thing. Same thing that happened right here. Stop run, market structure shift. The price leave a gap. When it come back for that retest, you want to play. So say you get stopped out, all it's doing, price is gonna go down to a deeper discount. You're gonna get a better entry. So everything that happened right here, you want to see it happen again. Stop run, market structure shift. The price leave a gap on this leg. When it come back to it, you play, take it up higher. That's how you do it. So that's how I look at it. If I was to lose that trade, ain't no biggie. It's gonna go down to a deeper discount. We're just gonna get a better entry, a even more precise sniper entry. You know what I'm saying? See how close that came to our stop loss? If it stop us out, it might give us a second opportunity to get in. That's what they like to do though. See how that dropped all the way down like that? They try to get you, the way I look at it, I think they be knowing that I be following them. They try to get me to close out. Nah, you don't scare me. I know what you're doing. You get what I'm saying? Where's price going? It's going up to a premium. And you could have got another re-entry right here on this little gap right here. You see this? And then the next counter, it opened up, wick down into this little area right here. You could have got an entry right here. You get what I'm saying? Right here on that gap. So boom, prices at a discount, it should go up to a premium, meaning these highs. See these equal highs is double top, retail resistance. Where would they put their stop loss? Right above this little high. All these highs up here. Price is driven to these areas. So it's like you want to follow it, you want to target it. And then boom, right this right here. Let me pull it. See this right here? All targets got achieved. So TP bang got hit. But you see how it just tapped into this little blue area right here? Look all the way to your left. We ran out all these highs and we tapped into this little gap right here. You see that? That's what we was aiming for. So you see how when price went in profit, don't let it come back down, just in case. Don't let it come back down to your entry. Take what it give you. Because every trade is not gonna be a home run. You get what I'm saying? Every trade ain't gonna just go to the moon. So you gotta have a reasonable target. Like these highs, this probably was a 2 to 1. Here, here, here in this gap. Take what it gives you. Don't let it turn around on you. Be mad and it mess with your psychology. And then it happened again. Like these markets are rigged. Like our sniper entry was down here, but look at this. When it started doing all this, you got this build up right here, consolidation. Then look at this. Same thing. It did it again. What's this below lows? What is this? Retail support. See how this red counter push down, stop them out. These folks blew their account. They don't know what they doing. This the counter that did it right here. Now you gotta ask yourself, the price break structure. So when price went up, it came down. Now we got that market structure. You see that right here? Let me go to the line chart. I don't think you see it. You see this little short-term high right here? Price to the right closed above it. You want to see the body close above it, not no little wick. You want to see the body. And you got to ask yourself, did price leave a gap? Right here on this little green candle. And then you see the next candle, you see that wick down into it. Right here. When it opened up, it wicked down into it. Now you want to play in here. You want to get your entry on the gap because it's a one-sided market. When they offer sellers into this candlestick, that's where you want to get your entry at. And then you just see price ran away from the area. You see that? Just trying to train your eye for my new people.
That's on
Boom. We
two.
always get our entries at these gaps every time. Here, here, here. See that? Every time we always play. And you got to look
Quick,
left. Where the money at? What area? Huh?
I was about to be like, quick
You said
question. So, would you leave your order where the gap is at, or would you wait until the wick is until you're done seeing the wick and then enter?
you want to see it wick into it. As soon as it, price trading to that candlestick, then you want to play. Your stop loss got to be right below the low. You get what I'm saying?
break
Mm-hmm.
break break down the steps for 'em real quick. Brandon, like step one, step two, and then step three, gap and play.
All right. So step one, let me take this off right here, right here. So so say we at a discount. We already know where we at. So now step one, you waiting for retail trader to get stopped out the market. So boom, you see that? As soon as this kind of opened up and it slammed down below like a double bottom or something like that, some kind of low, it can be like a little short-term low like this one. You want to see retail traders getting stopped out first. That's the first step. Now you want to look for a market structure shift. That's your signal that price is gonna go higher. So we're waiting patiently. Okay, that happened first. We're sitting on our hands. Okay, waiting for a market structure shift. Okay, so boom, to the line chart so you can see it. Price slammed down right here. Then it went up, made a higher low right here. Then we broke structure right here. You see that? I would have waited for this one right here to break, but it didn't do that. But then dropped down and made a higher low. Then we broke structure. So that's the second step. So you first step right here, market stop run. All the stop run is manipulation. Now we're waiting for a market structure shift. Boom, we got it right here. You see how aggressive that just pushed up? Now you gotta ask yourself, the third step is the price leave a gap. If price doesn't leave a gap, there's no trade. So the next counter when it opened up, you want to see it tap into this blue area. You could play anywhere in this blue area, but your stop loss has to be below this little wick right here. I would have put it right here, but it's normally you put it right below the candle that start the people out. It's normally right here though. You know, you can either put it below the little wick or at the body, the close of this red candle, the candle that start the folks out. But let's say we put it right here because I trade futures, so I can't have too big of a stop loss. That's too big of a risk. So next candle, boom. As soon as it play in that this area, you want to play. So let's say we bought right here, boom, 3 times. I'm gonna show you how we do it, and then I'm gonna show you the trade I did today. So boom, we bought it right here. As soon as price wick down into this little area, you want to play. Stop loss got to be below the low or at the close. So boom, I'm gonna draw the risk to reward out, and I'm gonna show you where to get out the market. So we buying right here because price is at a discount. So we put our stop loss right there, for example. So you got to look left to get right. So see this little wick right here. What's this above this? What's this above? What's this above this high? This money. And
People
then,
stop losses.
yep. So look all the way to your left. What areas in price are still open? You see these gaps right here? Let me zoom this in. You see this gap right here? It's still open. And it's like our previous entries that we got at the top, this premium up here. These people are still in the money. They're still in profit. What they put their stop loss at? Right above the high. So all of these are take profit areas. That's where you want to get out the market at. We don't guess. We know where to get in and we know where to get out at. So we bought down here, here. Now we're gonna play again right here. If you have some questions, you can keep asking. That was a good question.
Yeah, I had to ask because actually, from what I see you teaching, the way I already trade is already similar to that. Like I buy lows and sell highs, and I'm usually targeting about $100 worth of move, and my stop loss is usually about 10 to $20. But sometimes like I'm not 100% sure what to get in, or it doesn't make it to my $100, right? And then it would come back and come take me out, right? And like
Yeah,
let's say like I'm gonna give you today as an example, right? There was like 2 to 3 buying opportunities that I could have easily taken, right? And then when I
yeah,
finally decided to take a trade, right? I sold somewhere, right? And I'm like, yo, this thing been running all day. It gotta turn back around. So I like whenever you look at if I show you all my entries, you will notice that all my entries are literally at tops and they're like literally at bottoms. Like I catch tops and bottoms, right? But sometimes like
yeah,
it doesn't make it where I want it to go, right? And it will come back. They always tell you like, don't move your stop loss, leave your stop loss where it is and whatever, right? So I
yeah,
usually move my stop loss to a break even spot, right? And that thing will just come back up, come take me out, right? And most of the time, right, it will take me out, and then it will keep going the opposite direction, right? And then that would worry me. So when I do it next time, right, I move my stop loss at break even, it would come take me out and then go in my direction and give me my $400 that I'm not getting because I already got taken out of it.
yeah,
If you get what
yeah,
I'm
yeah.
saying.
That, hey, yeah, that happens. You're not gonna always
Uh,
get what you want.
Sometimes
Yeah,
though, like today, right? Like so, price. If you go to a higher time frame and look at like let's say the hour, the 4 hour, we were in a discount for that chart. So sometimes your confluence is like right. Like so, the reason it was buying up a lot today is because it was selling all week. So that's just something that you kind of have to learn to see in general. That like if you're on a very small time frame, like it could be in a buy or a sell. Let's say on the 1 minute it's in a sell. But like on the 4 hour, it could be in a position where it should be buying, right? So it's like so the reason today was a little more rough is because it was at a low for the week. and you had to look at like what the important zones of price was at. So that's just something like when Brandon says time is fractal, right? Like, so if it happens on the 1 minute or the 5 minute, right, it has to equal to the hour, but you still also want to check your ranges for bigger time frames so you can understand like how high price could go. You know what I'm saying? Because like on the 1 hour, there's a lot of space at the top of the chart, or like higher price where liquidity could be at. But if you didn't mark any of that up, then you wouldn't have seen it. So like we can never really fully say like when the market's going all the way up or all the way down, right? But if you have that idea, at least when you got stopped out of your first sell today, you could have re-registered on the 1 or 4 hour and started marking up the buy zones, and you should have waited for those zones to be cleared to see if price was going to show you any kind of reversal signs or not. Is what I would suggest for price isn't seeming to go your direction from your analysis on a smaller time frame.
Yeah.
Mm,
All right.
okay, I
Let
get
me
what
show
you're
you.
saying.
Let me show you this for the string cut off. Try to speed it up just a little bit. Now this is trade. This is futures right here. The YM. This the 15-second time frame for the futures. See this retail support right here. What's this below these lows? Money. I drew my field from the swing high. Where do we come from? Where we stopped at down here. So prices it went from a premium to a discount. So when prices at a discount, we're looking to buy. So same thing that I was showing y'all on Trading View. See this little consolidation, retail support. They buying. They buying. Where they putting their stop loss? Right below this little low. See this red candle had just pushed down. Stop these posts out right here. Now we're waiting for a market structure shift. Boom, we got it right here. You see that? So boom, right here, we got this market structure shift. Let me go to the line chart so you can see it for the untrained eye.
I
Right
have
here.
a question.
Yeah,
So you trade US 30, but in the futures market?
yeah, uh-huh.
Oh, okay.
It's the same, but futures is more cleaner than the forward on the forward side, on the industry side. It's cleaner. Like you can see this, even though this is seconds. I just try to be more precise on this trade right here. But when
Mm-hmm.
it broke structure right here, you see this little gap right here, this little one-sided market right here, and it closed. So I was waiting for price to retest this little gap. When it did that, I bought it. You see what it says buy? I had dropped 10 contracts right here.
Okay.
So
Yeah, so and it's all the same. Cause I'm not sure. I think you said you was wondering and inquiring about looking at the futures or something like that earlier, wasn't it?
Yes.
you were
Okay,
like this
yeah. So
brother.
yeah, so
We,
when he done, we'll tell you like the prop firms you can go with. Cause when it comes to forex, they have challenges and prop firms as well. So yeah, we'll touch on that.
Okay. Okay.
but I was looking to buy because price was at a discount. So this you want to see this happen first? Stop run. Retail traders have to get stopped out. So right here, they push down, stop them out. Now you're waiting for a market structure shift. Price went up, made a lower high, higher low, higher high. We broke structure right here. It's a little short term high. You want to see the body close above it. Did price leave a gap? Yes, it did. When price come back for that retest, now you want to play right here. If price is at a discount, let me take this off. We take profit at a premium. So you got to look left to get right. Where you trying to get out the market at? What's this about this high? These people still in profit. That's whoever's selling right here. Right here. What's this about this little high? Money. So I got my entry right there. And look at this. You know, it just shot to the moon. He said, shoom. I was like, whoa. And then you see where it says close at the top. That's why I closed out my position. So that was a nice little move. I wasn't finna be too greedy because you see how when price was buying up like this, in between these little areas, you see these one-sided market, you see how it closed? It's a gap right here. Let me show you just to train your eye. Like you see this right here? These areas are still open on these little green candles. It's still open. Uh, so eventually, So you see these little green areas still open. So you see where we came from, a discount. Price went from being cheap. See how it went all the way up to being what expensive now. So when prices are expensive, it's gonna start breaking down. What is it going down to? You see these little open areas that are highlighted blue? It's gonna fill those areas in because that's a one-sided market. You get what I'm saying? Just all buys, no sales. And then when they start offering sellers in the market, it's going to eventually fill in these little gaps that we've been talking about today. So I knew that in the back of my mind, price got expensive up here, but I bought low. I took profit at a high. That's how you want to do it. How do I? So boom. So look left. See all these highs up here? Look at that. See, price start breaking all the way back down. What is it doing? Filling in some of these open areas. It doesn't have to necessarily fill all of them in, but it's gonna fill in majority of them. And then it still exploded up to the upside. And my entry was way down here, sniper entry way down here. I took profit right here. I'm not gonna get too greedy because what if it come all the way back down to my entry? I'm gonna be mad. So take what the market gives you. This whole leg right here, that's all I need. Even though I left some on the table, it went even higher. But you never know. It might not do that. So always take what it gives you. And this the 15 second. You can do that on futures. So there's one and this works on all pairs, any asset class, Waffle House, McDonald's, Chick-fil-A. It's all the same. It moves just like this. The market is rigged. It's designed for you to lose. You know, big money they move price, so it's like you want to follow them. So you see how this red kind of right here pushed down below this little wick right here. Just show you some examples. Stop them out. The price lever. Did we get that market structure shift? See these two candles? We closed above this little short-term high right here. The price lever gap. This whole little area right here. See how it came back to it. You could have got an inch right here. You know, that's this how you want to do it. We look for these setups. Every day. This happens every single day. But the game is it has to be an A+ setup. If it don't look like this, how I just showed you that setup right there, I'm not playing. But this happens every single day. Don't let these folks lie to you. This happens every single day. I can show you setups. This the only thing that I trade, the US 30 or the YM. All you need is one pair from what I just showed y'all today with that discounted premium. We're going back and forth. You know, we're going back and forth. Sell up here, buy down here. Sell right here. How can I? Is can on here?
Yes, sir.
How do I get out of drawing mode? Because it says
That's a good question.
because I keep drawing and I'm trying to
Let me get to
pull
it.
my.
Just switch to a different pair. I think it'll put it back.
Okay, wow. All right, let me show you this. So you see this little area right here, this little gap, this big old gap. When price is breaking down, price tells a story. So every day when you come to the charts, you got to be like, what's the objective, today? See price, reached up, slammed down, and started breaking down. Price is expensive, slam down again. What did it leave? A big old gap. So where's price dropping down to? It's dropping down to a discount. So when price is at a discount, you should be looking for a buy down here. And you see price ran away. What did it do? Look left. Just show you how just look at it, how clear it is. What is this right here? It's a gap. So when price is at a discount, it's gonna go to that area. See how it just filled it in? What happened right here? See this little gap right here too, right above that one. Press tap into it. So that these candlesticks have been traded into fairly. Buyers have been offering in these two areas, and then it just dropped down back down to a discount. You could have bought it down here. You could have sold it right here. We got a stop run, market structure shift. Price tells a story. Came back down here to this discount. Could have bought it down here. Where areas and prices still open. See this little gap right here? It's still open. So when prices at a discount, it's gonna eventually get to that area, and then look at it, fill that area in. It's efficient now. Buyers have been offering on this little candlestick, and then you see where I got that entry down here. Price shot all the way up, took out this little wick, this wick, and you see this open gap right here. It filled it in, and it reached all the way up. What did it do? It's like they wiped the board. That's all price is doing. It's constantly seeking for liquidity. You see how it reached all the way up, right above these equal highs? Stop them out. Let me show you this. It's the 15 second. So, so let me go to the one that's even better. Cause this ain't like trading view. So from where I got my entry at, prices at a discount down here. You want to draw from? Where do we come from? Where do we stop at? That's where you want to stop at. Week to week. Where do we come from? Where do we stop at? Oh, let me edit this. It's the only thing I don't like about Apex. You gotta edit your field every time to what you, yeah. So this the 50%. So we bought below 50%. Price broke above that line. It got expensive. So when price is expensive, we're looking to sell it back down to a discount. So yeah, that's that whole premium area. So you can potentially look for a sell setup up here. Same thing that happened at the low. Same thing you're looking at the high. You want to see manipulation, retail traders getting stopped out, and you want to see price breaking down. You want to see structure being broken, and you have to ask yourself, did price leave a gap? When the next counter opened up and tap into it, now you want to play, but your stop loss had to be right above the high, and then trust the seller. Where the money at? Mark up the lows. If price is in a premium, when they go down to a discount, it's gonna start attacking these lows that it left behind, and it's gonna start filling in these gaps. So once you truly understand, discount and premium, your trading gonna take off. Your trading gonna take off for real. But this my account. I had passed my Apex account today off that one trade right there. That one trade passed it off the 15 seconds that I had just showed y'all. That one little trade, I just need to make 6,000. Let me show you this for my new people. So you see this eye right here? You see this eye right here? Y'all got y'all mics muted for my new people. See
Yeah.
this eye? I just drew it out. your eye like this right now is real small because you're new. But if you keep tapping in, if you keep tapping in for the sauce, your eye gonna just get bigger and bigger. You're gonna start, not getting enough sleep. It's gonna get bigger and bigger. You can be like, man, I can see the market clear now. You know,
My fault.
yeah.
What was
This,
that? What was it? Show me one
oh,
more
I
time.
don't think they
What
heard me,
happened?
man. Let me start. Let me
Yeah,
say
they
that
wouldn't
again.
listen.
Right for my new people, your eyes like this small right now. It's probably like this right now, but because you seeing the real deal. This the how price really moves. But keep tapping in, your eye gonna get bigger and bigger. But please get some sleep because don't go blind. Get some sleep. But this the real deal. But